So I want to go in detail on this financial statement of the trucking accounting and tax deduction spreadsheet that I sell on Etsy and also on my website. So in the last video that I did, I went over each of the tabs that goes in the spreadsheet, but I didn't go into detail on the financial statement and explain why things are laid out the way they are, like why we're just taking total income instead of net payout, right? And why are these items here listed or breakdown on the deductions here, and then what is the non-deductible expenses here and what do they mean? So in this video, I want to take some time out to explain that in more detail, so that it could help you understand the flow of this financial statement and this tax accounting of this spreadsheet more. So before I start, let me just say a quick disclaimer. So this video is for general informational purposes only and does not constitute accounting, tax, or legal advice. Always consult your own CPA or advisor for guidance specific to your situation. So I am a CPA, but I am not your CPA. So treat this as educational and not personal advice, okay? So before I explain this, let me just explain to you the difference between tax accounting and financial accounting. So in accounting world, there's two types of accounting. One is the tax accounting and the other is financial accounting. So I saw two of these spreadsheets. The one on the right here is the ultimate. So the ultimate is more geared towards financial accounting. So in financial accounting, basically you're going to an accountant to ask them to prepare your financial statement or look at your financial statement and see how can you reduce your expenses so that you can increase your income and have more money in your pocket. Versus if you're looking at tax accounting, and you go to a tax accountant or a tax CPA, what you're asking them to do is, hey, how can I increase my tax deduction or my taxable expenses so that I could reduce my income so that I could pay less money to the government, right? So that's the difference between the two types of accounting. So each of these spreadsheets are geared towards different things. So you go into a tax accountant, right? You're pretty much saying, hey, how do you or can you help me increase my tax deductible expenses? And that's what the spreadsheet is doing, is showing you what are your tax deductible expenses and how you can maximize that, right? And then if you go to a regular accountant to do financial accounting, basically you're asking them to help you analyze your business and how can you increase efficiency and boost your profit, right? So your goal is trying to ask them like, hey, where can I decrease my operating expenses so that I can increase my income so thereby I can have more money in my pocket? So that's the difference between the two types of accounting in the accounting world. So you have tax and financial accounting, or the regular accounting, okay? So the template that I built for the trucking accounting and tax deduction is for tax accounting purposes. So when you look at the financial statement for tax accounting purposes, it looks a little bit different than your regular financial accounting financial report. So unlike the ultimate, if you have a look at that, you're going to see it's broken out by fixed and variable, different type of expenses, and it analyzes things by the load. Here, it doesn't care, right? It's just looking at what is your income and what are your deductible expenses and how do you increase those expenses so that you can reduce your income and reduce your payment to the IRS, okay? So now let's go line by line on this financial report so we can understand why it falls into a certain category. All right. So in this example, I'm just gonna go through the January column so that we understand, and so everything else is just similar process. But so I'm just gonna walk through January. Okay. So as you can see here, the financial statement is laid out with profit and loss summary, and then you have your expense deduction breakdown, and then after that you have non-deductible expenses, and then you have reconciliation and cash flow below. So the reason why I put your profit and loss summary at the very top here is because that is the most important piece of this financial statement. You want to see right away what are your total income, what are your total deductible expenses, and what are your taxes owed, and what is your net income after that, because that's the immediate concern of this financial statement. And for you as a trucker as well, right? You want to see what is your net income, what are your tax liability. So, okay, let's talk about that first. So as you can see here on the very first line, what it's doing is taking all of your income, your tax, your total income, all your trucking revenue source. So you might wonder, okay, why is it not using my net payout, right? And why is it taking your total income? So when you report anything to IRS, if you ever work in corporate and get a W-2, um, you can see on the W-2 it always lists out your total income, right? It doesn't reduce your taxes or anything like that, right? Because you get your tax deducted out, federal taxes, state taxes, no. So they just want to know, the IRS want to know, what is your total cash or total revenue that you receive for the year that's related to your trucking business. So that's why here on column D for January, we put 68,135. So we can go here, income and settlement. So here, as you can see, I already highlighted anything that just related to January, so we can talk more about it. So you can see this is your total revenue. This is before anything that's being deducted out. So the IRS want to know this amount. That's the amount that you need to start out with, and then you can reduce all of your deductible expenses. Then you can arrive at your net income. So that's why on the financial statement, it's pulling this number over. So it's pulling your total income over, which is 68,135, and you can see here 68,135. And next, what we need to do is deduct out all the expenses that the IRS let us deduct out so that we can arrive at net income before tax. Hopefully, our deductible expenses are very high, right? Then it will reduce our net income, then thereby reducing our tax liability. So for January, we have $22,083.75 in taxable or deductible expenses, right? So here you can see this number is just a total of these total expenses. These are tax deductible. So this here is just basically a total of all these expense deduction breakout. Okay, so we'll go here line by line. So here, as you can see here, the fees and commissions paid. So this is a deductible expense. So this comes from the income and settlement tab right here. This piece, if you have to pay out any fee to a carrier or somebody, this is deductible because this is an expense, a business expense, right? You need to pay this out to make money. So that's why this amount, 17,000 here, is added to the deduction here. It's deductible expense. And then your insurance deduction, same thing. This is a business expense. You need to pay this expense as part of your business, right? So that's why here you can see it's $151 and that amount is pulled over here. And then your EOD or equipment expenses. So these are the expenses that you can deduct as well. So they're related to a cost of your truck or your business. So that's why you can deduct this out. All right, so that's why the statement's pulling this number over right here. And then other deduction taxable, so this can be like a variety of things, but these are deductible. So for example, this can be like your trailer equipment expense or something like that, right? Related to your business, and they're deductible. So that's why it's pulling this $83 over. So right here. Okay, so your total deductions for your settlement is 17,000. So as you can see, it's only picking certain pieces, right? It's picking this up, it's picking this here, it's picking this, and it's picking this. So 17,318.75. So these are business related, so they are tax deductible. The other ones are non-deductible, and we'll talk about that later. All right. So all right, the next one is the vehicle expense. So these are anything that's related to your truck, right? That you paid for and it's related to your business. So for example, something like in this section will be your fuel, maintenance, repair, insurance, lease payment, depreciation, if you know what the depreciation amount is. So you go here on the vehicle expense, right? These are all expenses that are related to your truck are 100% deductible. Okay, so here we've logged that the total expense for this truck is for the month of January is 4,135. So that's why it's bringing this 4,135 over, right? And the next piece is your travel and per diem. So here, anything that's related to your business and then per diem related to your business would be part of this piece here, this deduction here. So this piece comes from your travel and per diem. As you can see with per diem, you get $80 a day for a full day rate, and then a partial day rate is $60. And then your deduction, or the IRS says that you can only deduct 80% of those value. So for example, we do per diem that's partial, it's $60. The value is $60, but you can only deduct 80% of it. So that means you can only deduct $48, and the other $12 is non-deductible. So as you can see here, for per diem, for the deductible, it's only $112. So that's why here it pulls over 112, right? So as you can see here, per diem for a full day, we got $64. So that is 80 times 80%, which is the allowable deductible percentage that the IRS allows. And then the other one, same thing, partial is $60, but they only allow 80% of it. That's why you only get 48. So that's why the statement's pulling those over. And the rest are, travel related. They're not per diem, but these are your travel related expenses. So you can put this here, and it's business related, right? You need to have these expenses to maintain your business or to create income for your business. So that's why they're deductible. So as you can see here, the amount is $227. So it's pulling this over. So $227, right? So total per diem and other travel and related expenses to your business that's deductible is $339. So you can see here, so that amount plus your per diem deductible, right? $339. Okay. So that's why the statement pulled this over. And then your business and miscellaneous expenses. So these are just operating business expenses. So for example, like if you have a phone, sometimes people use like 90% of that for business and then maybe 10% for personal, or you can just have like strictly business phone or a personal phone, right? So if it's strictly business, it'll be 100% deductible. But if you use it, let's say 80% business and 20% personal, then you can only deduct 80% of it. So here, that's why you can see it's broken out by deductible and non-deductible. So here, it's pulling over 291. 291 here, these are deductible expenses. All right, so that's basically how the information is pulled over for the expenses, and so that is how you get this 22,083. So this 22,000, the breakout of it is just down here. So these items here, the detail. So if you ever want to see, okay, how did it come up with this 22,000? It's right here, right? So it's 22,000 right here. So basically for January, we can see that our total income is 68,135, and then our allowable deductions or tax deductible expenses are $22,083.73. So that gives us a net income before taxes as $46,051.25. And then from there, these items are just estimated taxes based on the rate you provide. And so after paying these, or after adjusting for the estimated tax, you can see that net income after tax is $27,492.60. All right. But this amount is going to be different from your cash flow because cash takes into account your non-deductible expenses, versus net income, it doesn't account for that. So your net income will usually, net income after tax will be a little bit higher than your cash flow. Okay, so next piece we're talking about is this piece down here, non-deductible expenses, and then your reconciliation and your cash flow. So non-deductible expenses, so some of these come from your settlement deduction, and then some of it comes from a variety of your other expenses that you log, but they're not deductible. All right. So cash advance, the reason why cash advance here that you log here is not deductible is because this is money that's like you're borrowing money, right? It's not a business expense related. You're not paying this to increase your business income, right? This is like you borrowing money or someone giving you money that you need to pay back. So it's not business related. So that's why it's non-deductible. And then your escrow and maintenance fund. So this is just, you're being forced to save money for future repairs or whatnot. So just think of this as you moving money from your checking account to your savings account. So this money has not been expensed yet for a related business purpose. So that's why at this moment you cannot, or in January, you cannot deduct it out. But let's say in March come and something happens to the truck where you have to pay some money from this fund to go and fix up the tire or something, or fix up the truck, then at that moment in March, you can record that as an expense to your vehicle on your vehicle expense. And at that point in March, you can deduct that amount out. But currently in January, you cannot, because that amount is just sitting in savings right now. So you cannot deduct that. So it's non-deductible as of January, okay? And then auto deduction from settlement. So for example, this is something you would log, and if this is related to wage garnishment, personal loan repayment, it's non-deductible because it's not business related, right? It's more like personal issue, personal payment. So that's why this piece here is non-deductible, and you can see for January it's logged as $31. So you go to financial statement, you can see that is $31, right? And then business and miscellaneous non-deductible. So again, this is probably like if you have a cell phone and you use like 10% of it or 20% of it, and that is non-deductible because it's for personal use. It's nothing related to business expense. So let's go there. So as you can see here, these are non-deductible because these are like like the cell phone again, right? You pay 120 and you use 80% of it for your business. So the other 20% is non-deductible because it's business, or it's for personal use. So that's why only $24 went here. And then per diem for full day and partial. So you can see here you got per diem, but there's 20% of that piece that the IRS does not allow you to deduct. So that's why you can see here this piece is non-deductible. So here on the per diem side, where is it? Right here. So you can see here, this is non-deductible here. As I mentioned earlier, this is the value. And then this is your per diem. And this column doesn't need to be here. I'll just hide it so it doesn't be confusing. So this is the per diem value. This is for full and this is for partial, and you can deduct 80% of it. So this is the deductible that we saw earlier up on the financial statement up here. And this piece down here is non-deductible. This piece is the piece where the IRS does not allow you to deduct, right? So that's why we have it here, and it's $28. So you go to financial statement, you add these two together, it's 28. So these are your total non-deductible expenses. Yes, you paid them out, but you cannot deduct them, right? The IRS is like, no, you cannot deduct this. So you cannot add this to your tax deductions, all right? So down here on the reconciliation and cash flow, this is to help tie things together, make sure there's no error in this report. So as you can see, I started out with net payout calculation. So this is basically the net payout that you received on your income and net settlement. So this will be this amount here. This is your net payout after all deductions, right? 49,885.25. Because I wanted to do this because I want to make sure that there's nothing wrong with this report. So as you can see up here, we started out with gross revenue, right? This amount is much larger than what your payout is, right? So that's the difference. This one is just total revenue, and this one's net paid out after all your deductions. And then from here, I'm going to do a calculation so that I can tie this out. So if it's always zero, that means that it's correct, right? The math is correct. So for example here, what it's doing is per settlement tab. Actually, this comes from the settlement tab, so it's 49 here, which I showed you here. And then this other piece here is just reconciliation. So it's just adding all these up, right? So basically, it's just adding up your total income minus your deductions on your settlement, right? Then you should arrive at your net payout. So those two, if they're zero, if you gotta understand anything for this portion here, just understand that if it's zero, that means that this spreadsheet is doing the math correctly and the calculations correct, okay? So that means that they tie. And then from there, I do the net cash flow so that you could see how much cash flow you have. So cash flow is just looking, at your total um, money coming in minus your total money going out, regardless if it's tax deductible or non-tax deductible, right? It doesn't matter. Just looking whether how much cash did you get in and how much cash you had to pay out for that period. Okay. So net payout. So this is the net cash that you received after everything's deducted from your settlement, and these are your total expenses. So these are all the expenses that you paid, right, after your settlement, right? That's just not settlement related. Maybe just other business expense or other expense that you had to pay, right? So your net cash flow for this period is $45,068.25. It's a little bit different than your net income here, 4651, right? But that's fine because this is looking at cash. The other one is not looking at things that you can deduct out. This piece here is looking at things that you can deduct and non-deductible, right? So then your estimated tax obligation from the top here that you have to pay, and then your net cash flow after tax deduction is 26,509.60, and you can see it's a little bit different than your net income after tax from above, which is 27,492.60. So the difference you can see here is exactly this non-deductible expenses. So the reason why they don't tie is, as I mentioned, is that cash flow is looking at all of your cash coming in minus all of your cash that you need to pay out. Because net income, it doesn't consider non-deductible expenses. You could not deduct that out because the IRS says no. But from a cash flow perspective, regardless if you can deduct it out or not, you're still this much in the hole, right? So that's why I have a net cash flow after tax obligation. So it's easier to understand from, just from, a cash flow perspective. Did you make money this month or did you not make money, right? Do you have enough money this month or do you not have enough money? So cash in small business or the trucking world is definitely always king because you need cash to continue your business. So that's why I have it here, and hopefully having that is helpful. So that's very much how this template works and how you can analyze this template or this financial statement here, and you can see how you can where are your maximum tax deduction is coming from, because you can analyze this each month as you input data, right? You can see here is a trend going up or down. So for example, January, you can look and see, okay, I have $22,000 of tax deduction. February, I have $26,000 reduction. That's good. So I'm increasing my expense. Okay, is my income also increasing? Is it decreasing? And then by March, my deduction went down. Why did it go down? Is it because I generate less revenue or what, right? So you can look at all these detail and see, where you can maximize your return, and also look at your income. It's like, why did your income go up or down? Is it because I have less, revenue or load this month? Is that why I got paid less? So that's what's very helpful about this financial statement, is not only is it giving you your taxes owed and then your deduction, but it also can help you analyze your business as well to see, is your income increasing, are your tax liability reducing, and then do you have enough cash flow, right? That's the main thing. So I hope that is helpful. And if something I say in here is confusing or doesn't make sense, I hope you can use it as a reference and maybe research it further. Because sometimes when I talk to truckers, because after they buy my template, they do give me feedback on what I can improve, and kind of like what description I can have, so it's easier for them to understand. And sometimes when we talk, there are certain things that they say, or like lingo that's related to trucking, that I have a hard time understanding. But I do go and research it further so that I can understand more of what that means. So I hope that by having this explanation here, regardless if you buy or don't buy my template, it could be of some value to you. So, and if you have any feedback for me, definitely reach out on my website or on Etsy. I'm happy to meet with you and talk. So, thank you so much for watching. And again, if you have any questions or concern, please don't hesitate to reach out.